that Tesla would bankrupt GM. Not is the focus of our show topic. The driver for this show was that there are a number of hedge funds, including Bill Gates, who lost upwards of $50 billion trying to short Tesla. And one of the lurking questions is, what are the elements as to why Tesla didn't go bankrupt? It keeps going up. And instead, a lot of the shorties, like Bill Gates, are suffering large losses in the process. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you'd like some better ideas on investing and trading in general and on Tesla, please join us on Patreon. So once a week, particularly when there's nice movement of the stock price, we always like to take some time to try to analyze, well, what's happening with the investment side of Tesla? Is stock rising and falling? And if so, why? So as you may recall, Jim Chanos recently went under, and he's a hedge fund manager based in New York and had been in business for 38 years and had a series of successes, including Enron, that supported his sort of bearish view of certain stocks from which he could make a lot of money. So Tesla didn't completely wipe out his $8 billion fund, but one could assume that at least half of his losses came from Tesla. So this raises a huge question, which will probably be a theme that flows through several of our shows. And that theme is, wait a second, how can Elon Musk, who's a sometimes volatile CEO but very brilliant, end up wiping out several of the largest money managers in the world because they couldn't, analyze properly what was going on with the company and therefore be able to trade that analysis successfully. So the quote that I'd like to introduce this with is from Elon when he said, owners of the car can analyze the stock better than the analysts. So for those of you who are owners, and there's a lot of things swirling around you should be aware of. Number one, notice how there are a lot of people you know that are good friends within your circle of best 20 or 30 friends who come to you for advice about whether or not to buy the car and the stock. Notice also that as this process works, you can look around your neighborhood, and yes, you may have been influenced by somebody else who bought a Tesla, but there's also a phenomenon where there are a lot of others of your neighbors that are watching you as well. And so there's a process by how technologies, or in this case cars, gain momentum in terms of relationship-driven process. So what as I was going through this process, part of one of our goals in this show is to sort of introduce ideas for how investments work and how and why certain things might be working. So today I'm going to focus on kind of three items. Number one is something called ESG. Number two, we're going to focus on, as I said, let's have a conversation about Bob Lutz, and let's use sort of his experience base. And I'm really looking forward to this part of it because a lot of people send me notes all the time talking about what's the deal with Bob Lutz. Today you're going to find out, and I think you'll be very surprised by that part. And then finally, after going through A and B, where are we and where are we headed and why? Those are sort of the questions. So the first part of this discussion, as I shared with you, was a concept called ESG. Environmental, social, and governance. So there's a process in investing. The process is somebody comes up with an idea. That idea turns out to be successful. And there's a lot of money at stake figuring out how to tweak that idea slightly in order to make money from it, from the original idea. So in this case, let's say we're looking at the whole concept of index funds. So what's happened is that Vanguard, for example, is one of the leading purveyors of index funds, and the cost of investing in index funds as a result is very low, and they pride themselves on the lowest costs of ownership, and therefore their fund has done extremely well. So the question for the money managers is, what broad category can we create that takes advantage of things that people and corporations care about? Because the biggest block of money out there is institutional and individual money management for retirement. And so this is how and why something like ESG was born. The idea is that, wait, we want to target companies that are environmentally focused and friendly. We want to target companies that also are well governed. And then we're also, so those are two broad categories that ended up sucking up a lot of cash in terms of people recognizing those issues and that those issues are important, and that you could identify large companies that are in those spaces that could end up being beneficial to invest in. So what I wanted to focus on is the fact that, well, okay, we've got ESG. Elon is kind of mad at the ESG folks because Exxon has got a better rating of ESG in terms of what stocks should be owned by people, despite the fact that they're doing so much damage with the sale of fossil fuel because of how highly regarded their governance is. And on the flip side of that, Tesla has not been getting a lot of governance points because of some of the lawsuits related to discrimination cases lost, et cetera, within the company. So Elon's kind of mad at this because bottom line is that there's a lot of carbon being taken out of the air by those electric vehicles being on the road and other ways in which Tesla is impacting the space and it being globally impactful for the client or for the climate. So bottom line is this: how does Tesla stock price keep rising when you've got a lot of bad news? China's numbers are down. We have a discussion right now of the fact that EV sales in general are down, et cetera, et cetera. So all of that should equal a lower stock price. Well, as you've noticed over the last, call it 6 months or so, yes, we had a dip, but that dip was given up and then the comeback started happening again. And the question is why? The quick answer would be more demand for the stock price increases it. And so where can that demand come from? Hey, how about ESG? Because it sounds like a very small title. There's actually a song called OPP by a famous rap group. And one of their taglines, "Are you down with OPP?" was the question that Tretch, the lead rapper, talked about. And so the question that comes up for you is, are you down with ESG? And the response would be, yeah, you know me, if you are familiar with that song. So what's actually then happening is that there's all these categories that Tesla is in: big cap growth, technology growth, the NASDAQ 100 growth. So there are all these targets and indices that consume large amounts of cash that Tesla is a part of, and so there are people that may not be thrilled with Tesla for whatever reason, but because of the index process, they keep buying the stock, and any dips in the stock, they end up buying it more because they still have to be in those spaces. But on lower pricing, it gives them opportunity to build up more share ownership and make themselves look good because they got Tesla at a price into the index that other people did not. So they can show higher returns to people because they're buying when other people are selling. So this brings up an interesting point that we've talked about numerous times, and that is that the definition of a market is a difference in opinion in the value of that asset. And so obviously there have been some difference of opinion about where Tesla is currently and where it potentially goes in the future. Let's reference our friend Gordon Johnson as an example of this. So so ESG is one of the categories that's out there. There'll be new ones created because Tesla is really big and very stable. There'll be new categories that are invented that consume more of in the retirement public's cash, and Tesla will be front and center in that process. So I have to say, I am really excited about moving on to our second segment of this show, which is, why do you keep talking about Bob Lutz? And why did he even end up in this title? So I did kind of a reverse title. Bob Lutz, as you may recall, over the last 3 or 4 years, predicted that very large OEMs like GM, like Daimler, like, call it all around the world, would, one, get their technology act together relative to electric vehicles, and two, start putting out large numbers of models that would blow Tesla out. And he actually took the time to go through 100 different models that were being introduced by these large companies. And I'm kind of chuckling right now because a question that comes to mind is, what if your competitors put out 100 different models, which in the old days of ICE engines was a great production, but all those 100 models have the same problems, and those problems result in consumers not being interested in buying those vehicles. So in this case, the question mark is, number one, what's the range of those vehicles? Obviously, number two is, what's the cost of that range in terms of buying them? Pretty high number for a lot of places. But there's this critical piece that I've been watching over time called range anxiety. So at the end of the day, the basic concept is you just paid $60,000 for a car, plus other fees and taxes. Now, when you drive around, you constantly have to wonder whether or not you're going to get home, because you don't know if there's charging facilities available and that those charging facilities work. So there are a lot of people, cars tend to be purchased on 3-year cycles, that are saying, hey, I'm going to skip this cycle because I may or may not want to buy from Tesla. But the other problem that pops up is, for the other options that are out there, if I buy from them, it's unclear whether or not they have solid solutions for addressing the charging needs of those vehicles. So yes, the numbers of EVs sold is down, but what I'm anticipating is, as we get into next year, we're going to see, as the relationships with Tesla and the use of its charging facilities kicks in, we're now going to see a large number of consumers that can answer the question, where can I get charged up, particularly if I'm in a dense city that I don't have a garage, as well as, even if you're not in a dense city and you're moving around, you can identify, readily places you can get charged up, and therefore eliminate the range anxiety from the whole equation, which is a legitimate argument by consumers that they want to see that before they want to get involved with an electric vehicle. So how does this tie into Bob Lutz? Well, you just saw Bob Lutz jump out of the woodwork with a Superman cape on. Here's why. GM had decided, hey, we're gonna beat Tesla by 2025, and we're putting up the cash to get that done, something that Mary Barra said is about $35 billion. Well, there's a little bit of problem that popped up there. GM got an exam. GM and the entire auto industry got an exam, and that is, how well do you know how to manage technology? And an example of the first exam flunk was the fact that they were in line already at the fabs for a large number of chips. The COVID hit, and in order to protect themselves from excess inventory, they canceled their orders. And then everything sort of roared back to life. And when they went to go get those chips, they found out that there were other customers that had purchased those chips, and therefore there weren't any available to be bought. So now you ended up with Ford, GM, even, global manufacturers all with the same problem, which is they've got vehicles produced, but they don't have enough chips. And in the case of Elon, there was some shortages, but because of the chips Elon chose, he was able to reprogram existing chips to move on to continue production from a different angle. So what this suggests is round one of the arsenal goes to Elon/Tesla relative to its technology management, in particular its chip management, and the ability to rewrite those codes to use chips that weren't their first choice, and therefore they could continue to grow and manage their vehicle inventory without the same problems as competitors. So therefore, Bob's prediction of those 100 models being introduced, wiping Tesla out in the process, did not happen. And so there are actually a lot of funds, hedge funds, that were down with the analysis provided by Bob Lutz, by same material being looked at, perhaps by Gordon Johnson, same material being looked at, by large institutions that have reports on the industry that they're using to determine what the future is going to look like and how to invest in it. So the ultimate Bob Lutz moment is the fact that GM, as you may recall, canceled the Bob Lutz inspired Chevy Bolt, and after canceling it, 3 months later, they brought it back. So the question is, like, why did they do that? Because that looks really strange. Guess what? Not only did they bring back the Bolt, but they pushed back a year the introduction of their newest and some really good looking trucks and other cars. And so what's going on with this? Well, there's a story that I believe is part of it. What happened is that the folks at Ford came up with this great idea. What they were going to do is the same process they did with ICE vehicles. So let's say you have a component. You sort of build that component, and then you go to several manufacturers and get them to bid on production. And so now you have a great situation because that competition helps lower price, and then you give that to one entity and they produce that item, we're good to go. The Ford folks informed us that there are 190 different subsystems in an electric vehicle. And so what ended up happening is that they went and did this process of bidding across all those subsystems. You now had individuals or manufacturers that created those, if you will, prototypes and then heading to production. But then after they put them in the car, what they found out was that, guess what? Each of those subsystems that were bid out there's proprietary copyrighted stuff that belongs to the people who created those. And they used their own software of whatever type to do it. And so what they realized was that, hey, in order for this to work, we're going to have to bring our software production related to subsystems in-house, just like a company named Tesla. And after they ended up bringing that stuff in-house, they found out that running a software company with a lot of moving parts like this is a lot of work, and getting it to work well with bug debugging, etc., is a very big challenge. So hence, there are a lot of entities that have decided to sort of step back in more of a pause mode, and therefore be able to get a solution that works better than what they've been able to come up with thus far. So when you ask the question, why is Bob Lutz relevant? Guess what? He's the one that worked on the R&D for developing the Bolt, and therefore that vehicle is still the leader of the pack of what they have ready to go that doesn't have a lot of bugs. And so all of a sudden, somebody who's long ago gone, his sort of process of build is still relevant because the product he created is still selling and is better working than anything new that GM has to offer. And so are they a year out from having scale of new vehicles that are going to run well? Well, they can show some really pretty exteriors, but in terms of working interiors of those pickup trucks, et cetera, it ain't happening right now. And because it's a software issue, the both build and debug time can be longer than expected. Now, you'll recall that one of the hedge fund analyses that suggested that Tesla was behind was the fact that the Cruise was working fine in San Francisco, doing a lot of logging a lot of miles, making money, and it looked like Tesla was way behind on that solution. Well, as you noted, they had to shut down. Everything in California has been shut down after a lady was hit. She was then dragged by an electric vehicle going by and suffered more injuries in the process. And so that effort, I guess, is in California shut down, but it's still being offered elsewhere. But strangely enough, the Dash idea by Tesla of using humans in their cars in their beta versions in Tampa is working, but Cruise isn't. So the question is, how many different ways can Tesla competitors be getting slammed? And so when you hear this issue of the stock price is doing a good to well to getting better, and they have new products coming out like the Cybertruck and then the Semi, et cetera, there's this phenomenon happening where the planned obsolescence bankruptcy of Tesla is kind of going the other way, with GM and others having a hard time matching up against Tesla. And the only way they're starting to get the matching up plan is to jump into vertical integration in ways Tesla has had to do because they just couldn't buy what they needed in the open market. But the challenge right now is that there's a lot of catching up to do by large OEMs around the world, and a lot of unhappy customers that have bought and not happy, but are hanging in there because they have a relationship that's longstanding with many of those manufacturers. So I'm sort of going beyond what our usual time band that we use of your time is, but next week we'll sort of dive further back into this. But there's still an open question right now, which is, how can Elon outflank some of the smartest people in the world as investors, and the people that are buyers and users of the car like you are outsmarting those well-trained, experienced investors and making money while they're losing money? And so the answer to this is what you're seeing as the stock price continues to rise, as new products keep coming out, as competitors keep sort of mismanaging themselves in this new space. So we look forward to your comments on this. Next, we'd like to go back to our health tips. Number one tip that I think is on our list, want to remind you of, 20-minute walk every morning or evening, you could do it, but every 20-minute walk every day, very big deal. Please take time to do it. And the 25 leg lifts a day, also a great idea. Highly recommended as well. Thanks once again for joining us. This is Greg for Teslafaninsight. Please take time to like and subscribe. Comments always appreciated. Tschüss, au revoir, namaste, arrivederci. And in Jamaica we say enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.